Well, we don't know that the Fed's going to get more aggressive. They're basically giving themselves the option that if they have to, they can. It's just talk until they actually do something. So I don't know that 3 rate hikes will be consensus if, for example, the stock market falls 5%. Then all of a sudden, we're going to get back to this discussion of, well, maybe the Fed is going to be more patient. So it's all nonsense. Forget about the reaction. The reaction yesterday was probably a lot of hedges coming off. People thought there would be something much worse or much more shocking. But one day's reaction really shouldn't concern majority of investors who are not playing on a timetable of that length. I think the bigger picture here is the Fed should be raising rates. The state of the economy gives them the ability to do it, and the state of inflation gives them an imperative that it's time to start having that conversation. But remember, even with the taper this month, on a net basis, the Fed is still, inexplicably, still buying financial assets every month. That's the part that has to stop immediately. And if we have to endure some volatility in the market in order for that to happen, so be it. It's unjustifiable for the Fed to be continually buying Treasury bonds. It serves no purpose. It's unjustifiable for the Fed to be adding liquidity to the mortgage market with where housing prices are. It's unjustifiable. So I like that the taper has come. I feel that there is relief on the part of business owners and people that are bearing a lot of these costs in the Main Street economy. And sometimes the stock market has to suffer in order for monetary policy to do what it's supposed to do. And what it's supposed to do is not continue to throw emergency stimulus at an otherwise healthy economy. So I think the supply chain shocks, we talked about this 2 days ago, I think we're seeing the worst of that now. I don't think we'll still be in that same place a month or two from now. So some aspects of the current inflation will peter out. And then we'll see what we're left with. But if you look at 5-year expectations for inflation, so forget about what everybody feels about the current moment. 5-year expectations are now back under 3. I think 2.8%. That's reasonable. That's what the Fed told us they wanted. They've spent the last 10 years telling us they were going to give us 2 to 3% inflation.
That's cool. Well, here's
that's
what I need to know.
the market now expects in the out years.
Here's what I need to know.